Good evening, and welcome to today's market briefing. Let's start with a quick look at what happened overnight in global markets, because it sets the stage for what we can expect in today's trading session. U.S. stocks closed roughly flat last night, with the Nasdaq at 25,690, the S&P 500 at 7,498, and the Dow at 52,218. But the real story is in the futures market. Nasdaq futures are down 1.44%, S&P futures down nearly 1%, and Dow futures down 1.1%. This points to a weak open for Wall Street later tonight. The VIX, often called the Fear Index, surged 13.76% to 18.93, moving into what we call the mildly fearful zone. That's a clear sign that risk appetite is deteriorating fast. In commodities, Brent crude oil plunged 9.13% to $86.83 a barrel, after OPEC Plus unexpectedly announced a production increase. But here's the twist, U.S. benchmark WTI crude actually rose 4.02% to $91.27. That's a massive divergence and something we'll be watching closely. Gold fell 1.91% to just over $4,050, as the U.S. dollar strengthened to 101.44 on the dollar index. The bottom line is clear, global markets are in a full-blown risk-off mode. Now let's turn to the external environment for Chinese assets. The yuan is relatively stable, with the onshore rate at 6.7626 and the offshore rate at 6.7756. Depreciation pressure is manageable for now, but with the dollar strengthening, we need to keep an eye on the offshore yuan. More importantly, the Biden administration yesterday expanded export controls on chip-making equipment to China. Beijing has already responded, saying it will take countermeasures, possibly involving restrictions on rare earths and critical minerals. This is the single biggest risk factor for today's session. So what does this mean for A shares? We expect a weak open, with the Shanghai Composite likely to trade in a range-bound, slightly negative pattern. The Chi-Next board, or growth enterprise market, could see even steeper losses given its heavy exposure to the tech sector. The key support level for the Shanghai index is 3,850 points. If that breaks, the downside could accelerate. In terms of sectors, two themes stand out today. First, rare earths and critical minerals, because they are direct beneficiaries of any countermeasures Beijing might announce. Second, utilities and power stocks, which have been strong lately and offer defensive qualities in this environment. On the flip side, be very cautious with semiconductor, AI computing, and consumer electronics stocks. The renewed U.S. export controls directly hit their earnings outlook, and with tech futures under pressure overseas, we could see a significant sell-off in these names today. Foreign capital flows will also be a key tell. With the dollar strengthening and Sino-US tensions rising, northbound capital is likely to be a net seller. Watch the first 30 minutes of trading. If net selling exceeds 20 billion yuan, that would confirm the bearish view. Here's our core takeaway for today. With risk aversion dominating global markets and a fresh round of tech restrictions hitting the headlines, A shares are under pressure. The market narrative will revolve around defensive plays and countermeasure beneficiaries. Keep your positions light, avoid chasing momentum, and wait for clearer signals before making any aggressive moves.